Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, I simply want to do my best to provide a little bit of optimism considering our sectors of the market are getting absolutely rocked right now. Okay, so to do so, we're going to kick off the video by reading through this short CNBC Pro article titled, "The S&P 500 typically gains big in the year after midterms, even when there's a recession." Okay, after this, I want to read over my macro analysis newsletter from yesterday, where I talk about the one catalyst that is happening this Thursday, November 10th, which I believe should provide some relief for the markets. And if not, it might be freaking doomsday. So I'll expand on that as well. After that, after we cover some of the fundamental touch points, we will dive into the charts and talk some technicals. Take a look at the S&P 500, of course, because that is the benchmark ETF or index for the U.S. equity markets. Move on to Bitcoin, because at the time of recording, we are down over 10% in the past 24 hours. Obviously, following that FTX news, which just rocked the markets. There is some liquidity crunches in play right now, but I am remaining optimistic. I do feel there is a light at the end of the tunnel, and hopefully you guys feel similarly by the end of this video. And then we'll close it out by taking a look at the Dixie on the charts, or the US dollar index, because dollar up, everything else down, and vice versa. And right now the dollar is reaching a pretty pivotal trend line or line of support that, again, could make or break. And this is really all coming down to the remainder of this week. Okay, so I'm excited to dive in with you guys. Before we do, please let me know in the comments down below how you're feeling about the markets, if you're holding up all right, and if you aren't, I do have some motivational words in this Trade Alert macro newsletter that we'll be reading through as well, where we can just, during hard times, it's good to have a community. That's what Waves Capital is for, and we will reflect on that a little bit too, okay? But let's kick it off with some tangible fundamentals. S&P 500 typically gains big in the year after midterms, even when there's a recession, okay? So recession seeming pretty damn likely at this point. So Tuesday's midterm election may spur some near-term volatility, but history shows the stock market typically rises the year after the off-year contests, even with a recession. The year following midterms has historically been a strong one for the S&P 500, with the benchmark gaining 20.1% on average, according to Citigroup data, going back to 1960. So that means dating back to 1960, obviously. All the way back to 1960, the average gain in the year following midterm elections, which is right now, 2022, results coming soon, is 20%, or just over 20% for the S&P 500. Even when there's a recession the next year, returns are surprisingly robust. And remember, you guys, we've been saying this a lot. The stock market and the economy are two completely different things. The stock market is a leading indicator for the economy. The stock market tanks first, and then the actual economy crashes, because the stock market and the equity markets, the financial markets, are hyper efficient at pricing in foreseeable headwinds, which are typically an economic recession. Okay, that's why the stock market historically recovers at least 6 months prior to the actual economy and GDP, etc., itself recovering. Okay, so even when there's a recession the next year, returns are surprisingly robust, with the S&P 500 rising 24.4% on average during 3 instances in 1974, 1990, and 06. That's especially pertinent now, with many economists expecting an economic downturn in 2023 in the wake of the Federal Reserve's aggressive rate hikes to tame inflation. So you guys can pause the video here if you'd like. The year after midterms has historically been a strong one for stocks, so you can just take a look at this, and that's a very basic chart that gives you guys an idea of historical performance the year following midterms. Okay, so quote, "Equities typically perform well following midterm elections as political uncertainties decline," Ben Snyder, Goldman Sachs senior strategist on the U.S. Portfolio Strategy Macro Team, said in a research note. Equity returns have generally been slightly stronger under divided governments than when one party has a unified political control. Republicans have been consistently favored to win control of the House, but the Senate looks like a toss-up that could come down to even a single race. A divided government could be more beneficial to the market by making big policy shifts even more difficult to pass. Okay, so again, you guys, when there's two, competing parties, or more, a better way to say that would be when one party, one side, blue, red, whatever side you fall on, I don't really care. But whenever one side has absolute control, they can just pass things that makes things a lot more unfair. And that's why Nancy Pelosi is a meme for being the best stock trader of all time. Okay, so political uncertainty, close it out here, may also help explain why S&P 500 returns have generally been slightly weaker when one party has had unified control of both the White House and Congress than under divided governments when major changes in policy are less likely, Snyder said. Okay, so again, you guys, those last comments were kind of just explaining why the psychology and kind of underlying nature of why midterm elections or just elections in general are actually good news for the markets. But main thing is here, look at this. Historically speaking, which is pretty much all we look at as traders, right, is using history to our advantage in the present to make the most, to skew the odds in our favor when taking on a trade. This is good news for the bulls. And right now, once again, although it's hard to feel like the glass is half full because it's actually not, it's probably like a fifth full right now. It's still good to be an optimist. And personally, I still think these winter waves are coming. As you can see right here, I think some winter waves are coming. And I do think that, again, historically speaking, 2023 will be a good one. So let's talk about this catalyst that I foresee coming this Thursday. And we'll see if it comes to fruition. Once again, if this doesn't work out, I'll just explain it as we go. But it's a Monday. This was yesterday. It's actually Tuesday at the time of recording, but it's even worse. So it's yet another bloody day in the streets as investors lose faith in the seasonal / midterm election rally. Ever since Jerome Powell made his speech last Wednesday, the markets have been in a state of panic and fear. He stated that the Fed will stand firm in their siege on inflation and keep interest rates higher than many want for longer than many want. But the fact that this was surprising to investors is surprising to me. As we've said before, the Fed will not say that they're even considering pivoting until the moment they're ready to do so. If they did, then the markets would rally and immediately reverse the progress they've made. They need a clear signal that inflation is cooling prior to easing their tone. And personally, I think that the October CPI report being released this Thursday, once again, November 10th, mark the calendars, will be that signal. Many lose hope during times like these, but when it's easy to quit, it's especially important to stand strong. I don't want to echo the TED Talking motivational speech that I gave on Friday. So actually, I did a lot more motivational speech on Friday. But to sum it all up, you guys, hold your ground, don't panic, stay rational, and stick to the plan you've set for yourself. I still believe winter waves are coming, and I won't allow the day-to-day volatility to scare me out of my positions. Again, you guys, these markets are brutal. If you're trading calls, like I know many of you are, like I am personally, like the Waves Capital portfolio is highly consistent of calls. So I'm trading calls. The time not to sell calls if you think they're going to go up. Obviously, if you're not trading super quick strikes, which I never expect you guys to do. I hate when you guys say you do that, trading expirations that expire like this Friday or even next week. Always, you guys, 45 to 60 days out when you're trading options contracts. But if you guys are trading contracts 45, 60 days out, almost preferably going into 2023, days like today are not the time to sell. When there is fear in the air, when there is blood in the water, do not sell. You got to be a shark. You got to prey on that blood and stay strong. And hey, it's good to live through times like these. It builds mental calluses. It builds emotional calluses. And it allows you to hopefully be a better trader, be a better investor during the next cycle. And hey, as long as you stay playing, as long as you don't get cleaned, then you're good. You're good to go. You just got to wait it out. Patience pays, okay? So on top of the CPI data being released, we have a few of our larger holdings announcing their Q3 earnings this week as well. Let's talk about them. I'm not going to talk about them now, but if you guys want to know how I'm personally trading in my own portfolio, in the Waves Capital portfolio, on a day-to-day basis. If you want these newsletters, this was the Trade Alert newsletter right here. If we scroll down further, I do have all the trades I made that day, but I won't look at those, or I won't scroll down to those for respect out of subscribers. And of course, every day, I also write the price targets newsletter as well. This is an example of this morning's price target newsletter. We covered Unity, Plug Power, Matterport, Carvana, Bitcoin, Riot Blockchain, and Render. Just a quick scroll down. That's kind of what it looks like. The general, just take a screenshot of TradingView, throw it in here, updated price targets, just day-to-day thoughts on some of our favorite names, and of course, a complete breakdown of my entire personal portfolio, which I do update daily. So if you guys want to join Waves Capital for real, if you want to join the winning team, first link down below takes you here. Click on Complete Portfolio Daily Newsletter. You do get everything that is written down right here. That is what this course and subscription entails. And choose your pricing plan, whatever works for you. $15 a month, $40 for every 3 months. You can try it free for 7 days and just bail out if you don't like it. But I trust you'll be sticking around, and I look forward to seeing you on the inside. So that said, you guys, let's take a look at the S&P 500, Bitcoin, and the Dixie. So actually, these just recycled. So I'm glad I started the video showing you what that was looking, what Bitcoin was looking like, down 10%. So kicking it off with the SPY. Okay, so the SPY is actually looking very, very strong right now. Okay, the SPY has broken through medium-term resistance. I was going to call it short. This is more medium-term resistance dating back to that little mid-August rally. So first touch point right here on the downtrend. Next touch point right here. The SPY did confirm a breakout on October 24th. Broke out, saw a nice little rally up, and also reconfirmed this broken level of support. Once again, this orange line right here. This broken level of resistance, as new support, and successfully bounced off that with daily stochastic RSI curling to the upside. This is very bullish from a medium-term time horizon perspective, okay? With CPI data coming out on Thursday, that I expect to be good. Once again, if it's not good, if October CPI data is hotter than it was in September, then the SPY is probably going to $20. But I pray, I hope that won't be the case. I don't expect that to be the case, all things considered. And I do think that will bring relief, not only to the S&P 500, but to small caps, growth stocks, crypto, etc., etc. Okay, so this is a clean series of lower highs and higher highs and higher lows in the short term following this medium term breakout. I do think ultimately the SPY will come up to test this broken line of support as new resistance, which does actually coincide with macro resistance on the overall downtrend dating back to the SPY's all-time high on January 4th of 2022. Touch point, very significant line of resistance here. I do think that the SPY can make its way up to test both of these trend lines, whichever comes first, by the end of the month. Let's even extend this. Oh no, not that one. Let's extend this one out a little bit. We can take this one to the end of the month, December 1st. That would take us, even if it takes us till December 1st or the end of the month, I still think the SPY can see 405 to 410 by the end of the month in order to test resistance. If it breaks above that, I think this will be the next trend line to keep an eye on, okay? So 410 to 420, I would say 415 conservatively. 405 to 415, let's say that is my target range for the SPY over the coming months. And of course, the SPY, as I said, the king of the US equity markets. If the SPY is doing well, then pretty much everything else is going to follow suit and do well as well, okay? Obviously, there's caveats. Bitcoin is a caveat right now, but for the most part, if the SPY is going up, the greater markets are going to be in decent shape, okay? So Bitcoin, once again, obviously falling today because of the FTX news and CZ and Binance having to acquire FTX in order to prevent some liquidation snowballs from occurring, like what happened back in May with a lot of the other kind of degenerate institutions, if you even want to call them that. But that's what happens, you guys, when you over leverage and bite off a little more you can chew, right? So Bitcoin is not looking good. A lot of trend lines have been broken. It's of course, this happens the day after Riot Blockchain announced their Q3 earnings. Video couldn't have aged worse, but that's all right. Anyway, you got to stay objective, you got to stay adaptive, and take it day by day. So, curveball just ruined all hints of all hints of the uptrend that was developing following the long-term, the short-term and long-term breakout. I just explained this, so I don't really want to talk about it again. But medium-term breakout, this line of resistance right here, we are on daily candles. Macro resistance dating back to the all-time high in November of 2021. Boom, boom, boom. We are in medium-term and long-term breakout mode. But unfortunately, Bitcoin is on its way back down. Again, did really just shot down all hope of kind of the short-term uptrend. This is the pretty evident line of support right here, or you could even say this is the line of support. But regardless, both of those have been broken either way. And things aren't looking good, you guys. Again, 10% down in the span, especially we popped real quick and then we just dropped real quick. So cool little pump and dump, really brings us back to the good old Wild West days, which kind of sucks, but that's the reality of the crypto markets. On the bright side, Bitcoin does have a significant level of support in play right here. So support on the bottom and just bottom end of this range dating back to mid-June, those June lows. Really just a solid floor around like the 18 to 18.5 level. And also previous resistance, previous medium-term resistance, that one, once again, did signify that breakout right here. This green line right here is coming into play as new support. Okay, so broken resistance coming into play as new supports. Good stuff there. And these two are intersecting pretty much exactly where Bitcoin is right now. So Bitcoin has not closed a daily candle above those. It did not just close the daily that we closed 5 minutes ago during the recording of this video. That's when that daily candle just cycled out. You can see 23 hours and 54 minutes left. So that's good news. If Bitcoin holds above this and continues to close daily candles above, I'd say like just $18,000 just to play it safe, I guess. That does provide some hope. But once again, I do think that the CPI data on Thursday will bring relief to the greater markets, not just the SPY, but Bitcoin as well. So on that note, let's take a look at the Dixie. Dixie, as I said in the beginning, is reaching a very, very significant kind of point of resolve, I guess. And that is the significant line of supports that has been in play since February, okay, since the beginning of this year, you guys. So at the beginning of the dollar's rise to fame, because it's been absolutely ripping over the past 8 to 10 months now, we have held one of the cleanest and most solid ascending channels I've seen on any asset for sure this year. But in a long time as well. I mean, this is a pretty textbook ascending channel, right? And in the past 3 days, the dollar has sold off significantly, which is weird because pretty much everything else is selling off as well. So capital is having a tough time finding a home. Bonds, I guess, bonds and treasuries are really the safe haven asset right now. But who wants to trade those things unless if you're kind of in Waves Capital or in this mix? But the dollar, again, dollar up, assets down, vice versa, dollar down, assets up. If the dollar breaks this line of support right here that it's held for, once again, the better part of the entirety of this year, if we break that, that is technically very, very bearish, okay? We got 3 consecutive red candles in a row right here. It's not quite the pattern that I was just going to say it was, so I'm not even going to say it. But 3 black crows is what I was going to say, but not quite that. Three red candles in a row is not good, especially when they're daily candles. And I do think it's very possible that the Dixie, following the CPI data report, if inflation comes out cooler, this will almost inevitably break below support. And from a technical perspective, bad for the dollar, good for equities. So we'll call it there, you guys. Please, once again, let me know in the comments down below what you're thinking about the markets right now. If you're holding up all right, if you need some help, if you need a pat on the back, need a firm handshake, let me know downstairs in the comments. And everyone, always be nice. Be a good community. I have high expectations of the Waves fam. So I'll see you guys downstairs in the comments. Again, if you want to know how I'm trading on a day-to-day basis, first link down below. And welcome to the winning team, once again, if you do. So until next time, you guys, always remember, take action, make waves. Peace.